Hey guys, welcome back. In today's video, we are talking about the storm brewing for AMC, how we're going to margin call the short, how apes will win, and many more in this video. First, we're taking a look at this. At some point, the pressure will be too much and they won't be able to contain it. So during the past couple of days, we've seen how AMC has been going up. We've seen the pressure, and you can see this reflect in the borrow fee and the shares availability. What we are seeing is the shares availability going down. We're seeing a struggle in shorts finding shares, locating shares, and of course borrowing it. And in return of that, what we're seeing is the fee going up. Now, it's only at 1.24. It's nothing major like we've seen in the past in the hundreds of percent. But the very fact we are right now seeing the cost of borrow go up as we see AMC also going up, it really talks about how the demand for AMC shares is needed, how they are trying to prevent the price of AMC from actually increasing, and why we're seeing all of these shares being borrowed. We talked about how it's very likely every time we are seeing the shares availability, when we do see 1.3 million shares popping up, it's very likely that these are actually synthetics. Now, recently, we have been seeing multiple institutions buying into AMC. So now it could be the fact that we are seeing these firms actually loaning them out. But nevertheless, the fact we are looking at all of these things going up as we see AMC go up, it talks about how we are having an effect on the short sellers. Another sign of the pressure that we are building, of how we're battling against these shorts, is if you look at today's pre-market volume, we saw it at 4.55 million. So obviously it wasn't the retail. It feels like something bigger is positioning. And you can see here. Now, if you want to take a look at the exact thing, it came in at 809, where we saw 4.4 million in volume. That's exactly what happened for AMC. So it came in one consecutive time frame. And what we have to realize is that right now, they want to do these things during times where no one is noticing, during times where it won't have a massive effect on the price of AMC. And we've seen this. Most of these big trades we've seen in the past have been done pre-market and post-market. And what we see is that it's because they're trying to do something quiet. So the very fact we saw something being positioned, especially the fact we saw AMC actually hit a high of 145 today, it really goes to talk about how something feels like it's happening. It feels like everyone's trying to quietly or as quickly as possible accumulate as much as AMC. And this is why we've seen this pre-market volume happening. Another thing you can see is that in total, when the market started, literally today, we saw the volume go all the way to 7+ million volume very, very soon after the market had started. Just as we said, so many things is happening for AMC right now. We talked about how going from 0.93, we've seen AMC already go up to 1.38, an increase of over 50%. We talked about how well AMC has positioned themselves as we see the recovery of the box office. So it's not a surprise that we're seeing so much volume happening, especially at a time where everyone realizes the investment opportunity for AMC. You can see AMC was at 1.45 at one point, up 7.93%. We are seeing it at 1.38 now. And what we have to realize is that today could mean something important if we're able to see AMC close above 1.5. Now, the reason why I say this is because whilst closing above 1.5 wouldn't allow us a gamma squeeze, but it still would be enough to have a significant push north if we are able to see the 150 calls end up in the money. And who knows what price level is required to trigger the breakout event. Just as we've said, there have been so much short positions being opened since we've seen AMC go below the $2 area. Firstly, we talked about the shorts at 210. Then we talked about the shorts at 280, the 180, 170 area. We talked about how some shorts were opened sub $1 area, potentially some at even 130 as well. As we see these levels happening right now, if we are able to see AMC closing above 150 and we're seeing a small push or a big push, which allows us to firstly go up to 210, so reaching that first set of big shorts that we've talked about in the past before, which in return would liquidate a margin call the shorts that were opened at 0.93, the shorts that were opened at 130, and it would also have a massive stress effect on the shorts that will open at 170. And so if we're able to see all of these things happening, you can expect AMC to then run up even higher. And as what we talked about, we don't know at exactly what price are we able to crush these shorts. What we do understand is that there are multiple price levels that we do know that shorts have opened, which will have an effect on them. And so some of them could actually be a major reversal point where if we are able to see the price go above that, it would indeed push AMC up even higher, because that's the liquidation price for the short sellers. And so that's what we want to look out for. And ultimately you can see price don't mean much for me at this level, but most buys since February are green and most shorts since February are red. Now, during February is obviously what we've seen around this area. What we saw again from February towards kind of the end of March is that there were so many short sellers that opened up their positions. We saw how vocal they were. We saw how active they were. And they were opening short positions at every level they could. Notably, the 130 like we talked about, and of course, the sub 1 level that we talked about as well. And so what we have to understand is that recently, because of this uprise, apes will be making money. The shorts will actually be losing, and indeed losing a large amount of money. If we take a look at another piece of data as well, what we are seeing, and this is something we talked about before. Now, again, this doesn't confirm anything. The reason why I want to mention this, and I want to make very clear, is because the reason why we talk about how technical analysis don't confirm anything for AMC is because AMC is so heavily manipulated and suppressed, it doesn't give us the true story. However, what we can use is historical data, because it gives us a rough understanding of what the sentiment is like for AMC. And so what we've seen was the price action of AMC in the past, and you can see how it was moving before it spiked up. And we're seeing that same movement again right now. And there's been multiple repeated patterns that's happened now that happened back in 2021, like we've shown you in the past. And so all of these patterns right now, especially with everything that's going on, especially with the fact we've seen AMC go up over 50%, it goes to show what's actually going on. It goes to show why these patterns matter and why we're looking at the short sellers starting to panic and trying to suppress AMC. And so if this pattern is true, if we are looking at a repeat of the data, you could easily be seeing AMC go up 100%, 500%, 1000% in the next coming week. Now, this isn't to say that this is confirmed. This isn't to say that I'm giving you guys a date, but it's using previous historical data to allow us to have a potential understanding of what could happen in the future. If we take a look at some other technical analysis, on the 90-minute, AMC has been meeting resistance, but it keeps flipping the script. All other time frames look even better. The sweep to the lows this morning was gobbled up, turning the bearish block into a bullish one. Finding support here, we might be on a decent path towards 150. So firstly, again, I stand on my point of how technical analysis can't be used the same on AMC as you would on other instruments, on other derivatives. However, what we can use it for, like I said, is for the sentiment. And so on the time frames, on different multiple time frames, you're seeing how people are buying AMC. You're seeing the accumulation. You're seeing the bullishness in AMC. And so we are going to continue on that path. And of course, what we want to see is that if today we're able to close out 150, it would obviously be a very, very good level. And so that's what we ultimately want to see before the end of day today. But if we don't close above 150, it isn't the end of the world. We have to understand that AMC has already done exceptionally well. It's just that it would be the cherry on top to end above 150. You can see we've been saying slow and steady. We've won, we didn't collapse, we've held this level. We know that 135 will have a resistance when we technically closed above it. So we closed, of course, on Thursday at the price of 135. We are now starting today, and which we could be closing at 139, depending on in 42 minutes time. But it goes to show how we don't need that extravagant 50% move. And if anything, the 50% move in the past have shown us how we were going to be met with halt and the price comes down instantly. What I'm hoping for this time, or rather what I'm looking for this time, is zero halts on AMC, because that is just absurd. But secondly, the slow moves where it creeps up to that liquidation price that the shorts are afraid to see. And if they aren't, because if we go up 10% every day, 5% every day, there is no way they will try and hold that, because it would just be crazy holding a stock that's only moved up 5%. And if they truly are holding on AMC because it moved up 5%, then that tells us everything that we need to know about it. Again, you can also see how the media articles in terms of portraying AMC has changed drastically. You can see AMC stock has a clear path to 24% upside this year. So going from the start of this year, even last month, where we've seen how they talk about the delist of AMC, another reverse split of AMC, the bankruptcy of AMC, to now how AMC has a clear path to 24% upside. Firstly, they now recognize that AMC is indeed undervalued. Now, we talked about this method used in the past before. They talk good about AMC, but they give a specific target and a very lowball target, in this case 24%. And so the reason why they say this is because they would then, for the people who don't understand, for the apes, or rather for the retail investors who are not apes, who haven't dived deep in understanding what AMC is like, they may think that AMC is undervalued, but only by 24%. And so when AMC does go up 24%, they all start selling the AMC, when in fact AMC is way undervalued than that. And so this is a tactic that they've done in the past before. Now, maybe with their own algorithm, with their own kind of system, they do think that it should only be 24%. And I'll give them benefit of the doubt, but we've seen in the past before how they've used these tactics. You can also see Seeking Alpha to talk about AMC as well. And they talk about how the worst is likely over for AMC. Again, we're seeing articles change their view on AMC right now, but it's so drastic and it's so weird that they were just talking about bankruptcy. A month ago, they were just talking about the end of the world for AMC a month ago, and now they're talking about how the worst is over. So they're telling me within kind of a 10-day period, a 20-day period, AMC went from the worst company in the world to now a good company within 20 days. Obviously, it's ridiculous, but it just goes to talk about how they will do anything to try and persuade the viewers, the readers, and to basically put them on a way to psychologically manipulate them. And we've seen them do that in the past as well. Now, another big thing is Michael Burry have started to buy even more GME. Now, the reason why he's said this is because he firstly believes of a major catalyst, but secondly, he doesn't see much downside. And then he talks about in a market crash, how all of this would allow GME to truly grow. And so this is the news that pretty much everyone has been looking out for, because it goes to talk about how, again, another market crash is on kind of the horizon right now. And in terms of which companies is going to come out on top of this, it's companies like AMC, it's companies like GME, HYMC, and some other commodities as well. But it goes to show how we are going to be winning. And you can see in the midst of this, we're now seeing this GME coin going crazy again. Again, this is what people say a rug pull. Once again, it's a ridiculous coin. It's something that you should stay away from, at least in my opinion. I don't touch it, but we've seen how this could potentially be linked to naked shorting, because we've seen the tokenization. Nothing has been confirmed of as yet, but the fact that we are seeing this coin go up as we see more news happening for GME, it really begs to ask why this is happening. Another big thing, when we take a look at the macro now. So we talked about AMC, we talked about GME. When we take a look at the macro and what's going on, we're firstly seeing how single stocks are expected to be more volatile than the S&P 500 by the largest margin since 2008. So this is already worrying, but this is also good, because when we talk about how the volatility, or is in this case the IV for stocks, is going to be so great, you can understand why people are trying to find that golden stock, why people are trying to find those gold diamond investments to allow them to truly come out on top of this market. And then when you take a look at where some of the inflow has been recently, AMC, GME, HYMC, and it goes to show what we talked about with the safe haven investments. On the other hand, the ETFs, Nasdaq QQQ just saw its largest 3-month outflow this century. So people are getting out of this. People are getting out of the Nasdaq. And it just looks like they are preparing for something. On top of this, the Japan yield hit its highest level this century. You can see how there are so many worrying factors happening right now, how we're going to be looking pretty much at a market crash going on, how we're seeing people really preparing themselves for the worst to come. And it's why Michael Burry's obviously doubled down on his GME investments. Reverse repo sitting at $0.4 billion. We saw it at 0.17, now it's at 0.4. Still a big worry because we're seeing the overnight financing rate drops to 3.59%, the lowest level since 2022, which is when we saw they needed the money the most. Secondly, US inflation rises to 3.3%, another worrying factor. Now, this is because of everything we just talked about. We talked about how the yield, we talked about the outflow of the QQQ. You start to see exactly what's going on. And then the big problem, which people are saying that this is what's going to cause kind of the equivalent of the 08 crash, which is the private credit. And we've seen how this is a massive problem. And if you want to see how people are withdrawing from private credit, we're seeing this massive spike that's happened recently. And so this is why I've said you've got to prepare yourselves. You've got to watch out for what's happening. As always, this is financial advice, and I'll catch you guys next time.